over 20 years, the Financial Health Network has spotlighted urgent problems and promising solutions to financial health. Together, working with all of you, we have made a lot of progress. But as we have also heard, many families are still struggling. Progress for these families means changing the outcomes for the millions of people who face daily financial stress. Over the last 2.5 days, we've heard of lots of these challenges. We've glimpsed at solutions. We're now going to explore what does it take to move the needle for the over 180 million people who are struggling with their financial health. And I'm very excited to have this conversation with this panel representing two of the largest and most influential financial services companies and the largest philanthropy in the nation. We're going to start off with the lightning round. In one sentence, tell us why this work is not only important, but urgent. Who wants to start?
You want me to start?
Sure, go for it.
I know, you said one sentence. Can I just say, I was so skeptical that day 3, the morning, that everybody would still be here. So thank you all for being here. It's fabulous. Okay, one sentence. That may be the biggest challenge assignment of this whole adventure. Okay, the growing epidemic of distrust in institutions, in leaders, is just a huge barrier to prosperity and progress. And I think the urgency for us is that we're at this crossroads where financial service providers and financial health innovators, we have the opportunity to either be trust busters or trust builders.
You used some commas, but that is one sentence. So
Oh my God, I didn't know you were going to measure
Chris.
it. So I think my sentence is 44% of Americans cannot afford a $1,000 expense. The funeral costs caused by the death of a loved one, and if that loved one is the main breadwinner, rent, groceries, and everything else.
Yeah.
So this causes stress, and not only to the individual, to the family. So life insurance is not only for rich people, and we're going to change that.
Clarence?
Cool. I like run-on sentences, sometimes some ellipses. So the urgency, when you had posed this question, for me, lives and livelihoods are at stake right now in this moment. I live in D.C., which feels in some ways kind of the epicenter of this moment of a deeply uncertain time, both economically. We have massive federal layoffs that have deeply impacted the D.C. community, but also communities across the country. Tariffs and the uncertain nature of them have destabilized small businesses, and folks really don't know kind of what to look for, and we don't know what the next few months and years have in store for us. On top of massive technological change right now that is rapidly evolving every day. And so that uncertainty, I think, brings an urgency to this work as people are trying to navigate this moment. How can we show up for them?
What is one insight or reflection from the last 2 days that has made an impression on you, either in terms of something that points to where we're still failing people, or something that's giving you hope?
I can start.
Go for it.
It's my first time in this conference, by the way, which
Welcome.
has been amazing. Thank you. And I think what really stuck with me was the fact that financial health is the base of everything, right? And we do a lot of work on mental health and physical health. And don't get me wrong, we should continue to do that. It's not one thing in detriment of the other, but that financial health is the base. If we don't get the basic fixed, it's going to be very hard to get the benefits of the other coming. So that's going down with me as kind of a big awareness call.
Yeah. I was struck, this is my first time at Emerge, and it's a very, I don't know, I've been heartened by the types of folks that are here, who's here, the tenor of the conversation, all geared towards trying to help folks. At the same time, and I was in a panel, the woman from Neighborhood Trust, forgive me if I forget your name, and she pointed out kind of Matthew Desmond's book, By Poverty, that talks about these structural conditions of poverty that really allow for exploitation and predation that keep people in cycles of poverty. And it, you know, that for me, there's a whole world, as you all know, of folks who aren't here, who make their living and have built businesses off those predatory regimes. And I'm, again, nervous about the tools that are now available for folks to do that at scale and in more sophisticated ways. And so I worry about that. I'd love to see more conversation. At the same time, what gave me hope, and I wrote it down in a panel later that day, the folks were giving their fintech kind of pitches. I think it was TrueLink, the founder was giving the pitch, around this card that basically helps stop with some of those scams, particularly for some of the most vulnerable. And I think we need more solutions like that. We need a lot more creativity in this space to help protect folks from some of those things.
Yeah, and we're going to actually come back to talk a little bit more about innovation. Brandy?
Kind of a takeaway or an insight. We have a lot of products and tools. And I was really struck by, I'm going to go all the way back to the opening, to Jennifer's opening remarks. What the thing that I really heard was reminding ourselves that what feel like smaller changes can have a very big impact, yellow lights. And so my big insight is that just to keep remembering, even when you opened, you said, how are we going to help 180 million people? I already felt tired. And I just keep reminding myself that revision and refinement is really what we need to be focused on right now, not necessarily revolution.
Yeah. Let's dig a little bit deeper into the insights and the reflections you can share from the work that you all are doing. And Brandy, I'll start with you. The policy and regulatory environment is changing rapidly, probably putting that mildly. It is reshaping the landscape in which we all do our work. When you think about that changing landscape, how are you thinking about who's going to benefit? What are you hopeful about? And what worries you about who might be left behind?
Well, I think we're really in a moment of many unknowns. And on one hand, you know, I think about the regulatory and public policy environment, and I want to sort of remind us that we're still working on the challenges that we've been working on for a very long time. So it's not as though we found the right regulatory and public policy kind of balance ever to produce the kind of outcomes that we want. So it's people are trying, leaders are trying different things. There are a few things, though, I want to make sure we stay on the positive. There are a couple of things that have happened in the past couple of months that I think reflect the work of the people in this room, and let's take it as a win. Executive Order 14245, do you know what that is? The modernization of payments. We've been working on trying to get people out of paper checks for a very long time. While I recognize the number of unbanked households, that percentage is very small. There are still far too many people outside of the financial mainstream. As of September 30th, any government payment to an individual, to a vendor, supplier, that is going to have to happen electronically. That is a huge scalable moment for us. The second thing, I see many faces in here that we've worked with for a long time around asset building, wealth building strategies, match savings accounts. Well, guess what? Who knew one big beautiful bill was going to contain something that first was called the MAGA account and now it's called the Trump account. So I don't know, we may need some branding expertise here, but basically every child born over the next 5 years is going to get $1,000 in an investment account. We've been working on that a long time. So there are some concrete things. I want to make sure we don't stay like at the macro level, but juxtaposing some of those early wins, there are two things that concern me. One is I would be remiss if I didn't just call out the fact that we've got a lot of innovators in the room. We've got for-profit, large regulated financial institutions. We've got fintechs, and then we have a whole bunch of community-based leaders who have been really working on the ground with real people in real places every day. Concerns me that you are being tagged with the label of being associated with fraud, waste, and abuse. This is a framework that is They may be coming to take me away after saying that. This is a framework that I think is going to really shift our engagement with public policymakers. So one, I'm really concerned about that. And then the second thing is at this much broader level, and we're not talking about it enough, and it is, I think, the trend that is influencing the concept, a lot of the concepts behind deregulation. It's not just deregulation to drive more profit, but there's something else. And that is criticism of the role of business in society. In 2019, Fortune magazine wrote an article that was based on work, where's Faye? I saw Faye, from FSG, that FSG had been doing around shared value, around profits and purpose. And the title of the article was, Can Big Business Have It Both Ways? And the basic message in the article was, yes, and that's what we're working towards. There has been this giant reset. Resets aren't always a bad thing. But today, if that article were written, it would have a different spin. It would say, profits and purpose, companies shouldn't focus on both. So I think that bigger debate around what is the role of the private sector in driving positive societal outcomes is actually underneath and fueling a lot of the regulatory and policy changes that we see. And I think we have a responsibility in this particular sector to really raise up how the core work we do shouldn't be politicized. It is truly about making America stronger and greater again.
Chris, before I ask you about your work, I'm curious your reaction to this last point Brandy made about purpose and profit, the tension between that or not. From your perspective, sitting in your role at Prudential, do you share Brandy's view? Do you have a different point of view?
Absolutely, and it's so interesting because when we were talking about innovation, that was one of the topics that I was going. I think the sustainability of the initiatives that we make with a business lens is absolutely important because we do want to push the agenda in the corporation that makes sense, that you can have a sustainable business model, and it is possible to have a sustainable business model that has inclusion, that is putting ourselves on the companies out there. Prudential itself, in its vision, is pretty much stating expanding access to financial education, to life insurance and protection and retirement products. Well, expanding access can happen where we are now, which, by the way, is high net worth, or as I like to say, rich people. We can expand access there, it's true, but not only there, right? How do we look at all the other pieces of society that we can also expand access while generating a healthy and sustainable business?
Yeah. Let's talk a little bit about innovation, Chris. And Clarence mentioned one specific fintech. Obviously, innovation is not limited only to fintechs or only to small organizations, even though at larger organizations, sometimes it may be a little bit more difficult or slower paced. But Chris, how do we ensure that innovation serves the people with the greatest need, not only those who might have the most wealth or most privilege?
Yeah, so I'll go back to the example I was giving, right? So Prudential is a very established organization in the high net worth segment. And basically, as we put out our vision, obviously based on growth and P&L sustainability, it's basically, there were two ways to walk this vision, right? One was really, what else can we do on the high net worth space? And there is a lot more that can be done in the high net worth space. But as we looked at innovation, how can we bring the idea of inclusivity? And I know it's like, oh my God, a cliche, here we go, like let's roll our eyes. But it is really important because when we discussed, okay, how do we actually then grow? Are there any other segments that we're not looking, that we're not ready to serve? And then I think the other thing is be conscious of the fact that what brought you here won't necessarily take you there. And my example is, if you decide to look into these segments, which is what Prudential did, you got to understand how to reach, right? So the innovation and the disruption might not necessarily be on, oh, I'm going to reach this segment, and guess what? I'm going to get the products I have on the shelf, I'm going to get the distribution I have on the shelf, and now just put it, in the marketing material, and it won't really help, right? So as we looked at innovation, in order to access a different segment, we pretty much put up a startup inside the company that is solely dedicated to this segment, that has its mission and its vision to expand access every single day. And that's all we do at Simplified Solutions. So I think when you go into the innovation, one, inclusivity, are there other segments that you're not looking? And then two, sustainability. The business needs to make sense, and it can. And that's, I think, the message, in my view, we should take. It can. And combining these two, you get a pretty strong push top-down to the company. And here we are with Simplified Solutions, kind of walking the talk, putting the efforts where we as a company believe.
Clarence, in 2025, it's almost impossible to talk about innovation without artificial intelligence coming up. And AI has come up in some of the sessions, but I want to tackle it head on this panel. And specifically, given your role, would like to hear from you what needs to happen to turn AI into a driving force for financial health.
Yeah, thank you. Just a quick show of hands, see who's still awake out there. Could you see you, Sarah? Can I just see a show of hands on folks who are excited about the possibilities for Gen AI with respect to financial health?
Yay.
All right.
Yeah.
Anybody concerned about? All right. Okay. All right. Well, I think that's where I'm at as well. I think, and just going back to this theme earlier of uncertainty, we're just in a moment of profound opportunity, but profound disruption as well. And depending on who you read and on which day and what you're hearing from the Frontier Labs, it could be quite existential on many fronts, not the least of which is labor market disruptions. But where we tend to focus, particularly at the Gates Foundation, I should say, just a little bit more context. I work on our economic mobility and opportunity team, which, if folks are familiar with the foundation, the vast majority of its resources have gone to international aid, global development, financial services for the poor, and other initiatives globally. We do support work domestically, inclusive of our education work, but also our U.S. economic mobility work. And our team focuses on a pretty specific population, working age adults, 16 through 64, who live 200% or below the federal poverty level. And so that's about 45 million folks in the U.S., depending on the given year or month. And so I just say that just so you understand kind of the lens on which we and I think about these tools. And I will say, we have a leader at the foundation, Bill Gates, who is he's famously an optimist, right? And so while we have concerns about what this moment means for folks, we do see opportunity, and we think there's a lot that could be done with these tools that couldn't previously be done to help folks, quite frankly, navigate a very confusing space, financial health being one of them, but writ large, and Brandy mentioned earlier, there's tons of products and services out there for folks, and there will be 100x more probably this time next year. And we saw some really cool ones in some of the innovator showcases, and there's folks right now who are working on, and it's easier than ever for one or two people to build a new tool or a service. And so our concern is, how are we ensuring, A, that we're building things that are accurate? So at minimum, if I ask something a question, or if it's giving me advice or recommendations, how do we know that it's quote unquote accurate advice or good advice? And some of that can be subjective. And so one of the things that we think is just kind of fundamental to ensuring that these things have positive outcomes is better benchmarking. We've seen this in the legal aid space and legal services. There's been some benchmarking around financial services, but for kind of higher income individuals. And so we really think that there needs to be better benchmarking for certainly kind of your more popular kind of Frontier Lab, ChatGPT, Claude, et cetera, but also the derivative tools that are going to come from that. And then, as we were talking earlier, not just accuracy, but usefulness, right? And so there's a bunch of things, and we're going to see a bunch of things that do something. There's a bunch of, we can do a lot of things with the technology. My question is always, how do we know it's doing something that's useful and meaningful for the end user and that is actually generating positive outcomes over time? And for that, we think a couple things are needed. And one, and others mentioned it earlier, starting from the ground up, we've seen, I've not that old, but I've lived through kind of a couple tech cycles now, and I've seen many services and technologies that have come along that do really cool things, but actually don't do anything that's meaningful for that individual, and those companies fade away in a year or two, but they get really good press. And so we want to hopefully build on those lessons learned, and you have to start, who is this actually serving? Does it, can you point to me your data, your conversations that shows this fulfills a need in someone's life? And in a way that they're comfortable. I think, I'm uncomfortable in some ways of interacting with some of these new tools, and I think we'll have to figure out different modalities of delivery for some of these tools. And so it's going to take a lot of experimentation and learning in responsible ways. We've made some investments. I know folks know Propel. We made an early investment with them, not to build a new tool or anything, but because they worked with our focused population. They have the tools, the resources, but to really internally start to experiment, understand where will this be useful, where are we getting really wrong results for some of the questions that we get asked often. So we think that type of kind of learning will be needed here. And so I think there's a big opportunity out there. We've lived through enough things where we can see this go really wrong. And so for us, it's kind of this benchmarking, kind of collective learning, sharing in the open, and then really starting with the end user and making sure that we're solving issues that they care about.
Can I
Chris and
just
Randy,
add on to that for one second?
Go ahead.
Can I ask you a question?
Maybe.
No,
No, go ahead.
It's really kind of rhetorical. Maybe it's for all of us. I think there's one other missing piece here in the particularly when we think about Gen AI, we keep thinking about how the innovations will, obviously, yes, the end user, what's the benefit, what's the impact, how will their experience be or outcomes be improved. But also, I'm increasingly realizing that we're not thinking enough about our own institutions and how Gen AI in particular can help make our own work and delivery systems more efficient. There's a lot of fear. I mean, we just rolled out Gen AI tools across the bank, and we use them, it's fun. Oh, let's see what, let's see what ChatGPT says about this. But we're not really using it in our own work to how do we summarize this? How do we get information? Because we're really suspect. And so I just want to say, I think some of it is we ourselves have to use it in our own organizations to reduce some of our own skepticism and understand how it can be a tool to improve our own delivery systems. And moving so rapidly, a year ago, that thought never would have popped in my head, and I can't wait to come back next year and think about also how funders can help enable the organizations we invest in to benefit at the organization level.
Yeah, thank you.
That's a great point. And just
Go for it.
just kind of one other piece. I mean, when I say end user, I do mean, and I think we are thinking about kind of the customer, the folks that are using the services. We have a big focus too, not just on that, but to your point, what we call kind of navigators, but it's really in this space, it would be a lot of the coaches and financial coaches that folks have mentioned. We think a lot about legal aid attorneys. We think a lot about social workers, right? These are the front lines, the folks that are working with that population. And to your point, that these tools could actually be quite transformational. There's both the hey, are these things going to replace what I do concerns? But they can be quite transformational in allowing the folks who have that subject matter expertise and who have the trust, quite frankly, to be able to better serve that population. That's where we're excited as well. And we don't have quite the same concerns because we are generally dealing with the types of folks who are in high demand but in undersupply. And so can we make it that they're able to serve folks, a larger swath of folks with higher fidelity while still maintaining that personal relationship?
Yeah, that's the same way that we were going, is how can those tools somehow increase the efficiency to increase the reach, right? The outreach and how they can help you bring the solutions. And still, sometimes as you said, it's not replacing necessarily their job, but it's making sure that some of the work can be done so they spend time, quality time, with people that they need. I think that's where we were going to.
If you all could work on one fix, and I'll ask you to pick one, it could be something related to technology, a product change, credit scores, a regulation. What would you want to fix?
Regulator. Hopefully there's no insurance regulator here, but
Say a little bit more.
Insurance is a very highly regulated business. If you all don't know, when you sign 10,000 forms to do your car insurance or whatever other insurance you have. So it's a very highly regulated industry. And it is an industry that is old, right? Prudential itself celebrated its 150th anniversary this year. And the rules and the way that it works is really created for the way it was distributed, and it is distributed to the high net worth segment, right? So usually what that means, I'll give you a brief example. It is someone sitting with you, doing your financial analysis, talking about wealth management, tax optimization, right? So it's a very different conversation that requires an individual that can give you the paper to sign, that can talk to you about that can really tell you about, well, now you're going to have to do a blood exam and pee in a cup. So that is what the regulation is prepared for. When you come to the world today, where we got to reach these customers, and sometimes I'm talking about a $3 a month insurance policy, because that's all people can afford. And by the way, that's all the protection they need. They don't need the $1 million, right? They need to be able to pay rent for 2-3 years after the main breadwinner dies. So once we go to that, it's very difficult to, again, to my point, make the business sustainable with these regulations in place. Because if I have to send a person to sign a paper, if I have to deal with a paper, that $3 policy a month won't make any sense, right? So for me, I think obviously companies are we do the innovation, we put what we need in front of the business, but then we need that support in the back to make sure that we can get there faster and in a more flexible way.
Randy, what is your one fix?
Well, I just want to build, no, I'm not giving you my one fix yet, because I'll be shorter with that. I just want to build on this and just say, this is reminding me that, you know, in this type of a gathering in prior years, we talked a lot about wealth gaps and racial wealth gaps. And then there's now these, you know, the DEI executive order, and it's created all this confusion about, like, is it legal to address the racial wealth gap? And I just, from a financial services regulatory standpoint, just want us to really double down and remember that we still have, they may be imperfect, but they have made a difference. We still have Community Reinvestment Act regulation, and we still have fair lending laws and regulations. And we should, I think, really all remember that those are not, as far as we can tell, those are not going away. They haven't been proposed as going away. And so I just say, think also about the regulations as a tool for aligning the work we do with things that are required. If it is legal, you know, we're asking ourselves as a company, can we do this? The very first question we ask today is it legal? So keep that in mind. And that the regulatory environment, the regulations that are on the books today help to answer that question. Yeah. Okay, but my one thing I would fix, so I didn't really understand the tagline for the conference, Voices of Change. I was like, oh, I thought we had the 20th anniversary last year, and we were celebrating our collective, us being voices of change. And then I realized, no, the voices of change are the households and the communities that we want to serve. And I think if there's one thing I would change, I just think that because it's gotten so complicated in the regulatory environment and the pressure on expenses is so tight, I just want to see us raise up these stories and make sure we have or building in empathy for the consumers we're trying to serve, and a real understanding of the physical and psychological stress that financial choices have in their lives, especially right now. But no matter what we do, the one thing is to also keep in mind that we can help protect and maximize scarce income, but we also need to keep in mind that if people don't have income, there's only going to be so far that they can go.
Yeah. Clarence?
I'm going to do two, but I'm going to be quick.
Okay.
But one is on the regulatory theme. I would like to see the restoration of a strong CFPB. I'll just leave that there. And the other one is kind of on another theme we were talking about earlier. I do think that I think business models for, and I think you all are in a slightly different place, but I would say kind of for startups that are trying to build a company, I think business models, particularly for serving our focus population, right, are a challenge. It is hard in some respects to both serve without moving into that, particularly given kind of the forces of VC in the venture capital model. I'm reading this great book now, just a quick plug, called World Eaters by Catherine Bracey. It talks about how the venture capital model is great for some things. I do think, right, it pushes companies that would otherwise serve folks in a certain way to make compromises and changes early on that move them away from their mission. I know you all have had a lot of work with that as well. And so I think that we need some innovation around business models, particularly as we're entering another kind of frothy stage with a lot of money going into AI-enabled, AI-first startups. And it is our hope, with coming to private sector, philanthropy, that everybody can come to the table and figure out ways that we can make this work for people while still, to the conversation earlier, moving towards sustainability as well.
I have a lot more questions, but I'm going to restrain myself for a minute. I'm curious, since we have this opportunity, do one of you have a question for your fellow panelists? Chris, go ahead.
Okay, so it might be polemic. I don't know how.
Go for it.
So my first time here, right? And I think throughout some of the conversations, there is this idea of, and I'm curious to hear what the panelists have to say to the idea, but there is this idea that companies should have the financial health indicator, and maybe I'm using the wrong term, but it's that indicator that would go on the quarterly results besides the profit and maybe the main key financial indicators for financial companies. It would be the consumer health, right, or how much you're contributing to it. Kind of like a more subjective view that would tie to the quarterly results. And I thought that was a very interesting idea as a concept. And I'll be curious, maybe to start with you, Brandeep, since you're in the financial sector as well, about your view on that idea. Assuming the helicopter is not going to come down and take all of us out.
I probably should have done the coughing. I probably should start choking immediately because I sort of get that feeling when I hear this idea. It's not like, and believe me, in my heart, I love the idea. But I think if we had a time machine and could jump back into our time machine, that maybe there was a possibility for that. I think there is no possibility for that right now in this environment. For those of you that have been watching or involved and seen environmental reporting and some of the regulations that the SEC wanted to put into place, what has happened in Europe and the sustainability reporting directive, the environmental sustainability reporting directive that was handed down to companies, and now the US is fighting that, and that was all around producing a rigorous type of reporting around the impacts that companies have in society and on the environment with the same rigor as your financial reporting, as your regulated financial reporting. So all of that environmental reporting, actually, our company, because we are global, we are subject to that European reporting, and that all was actually being produced, not in my team and my function, but actually moved over to our CFO's office and into our finance function. Seeing the pain and the suffering and the fight and the anger about that, and also seeing, that was from external forces, but then internally, how hard it was for us to do this. I just don't think that it's feasible. However, I will say, last year, the OCC came to us and asked us to say, how do you measure financial health? And you wouldn't think, by the way, that we've been hanging out with Emerge, with FHN for 20 years, since its beginning. And it was really hard for us to answer those questions. So I think to even if we did it on a voluntary basis, to have it be part of formalized company financial reporting, I don't believe we're going to see that in our lifetime.
Clarence, do you agree?
Since you might have an interesting view.
I don't know that I have don't represent a financial institution and don't have to deal with the complexities of that. I mean, of course, I'd love to see, those types of outcomes represented. The question on is there one, I think it was is there one indicator? As more of a novice to the space, I have been convinced, and we've done some investment with the folks at Savor Life, and you mentioned it earlier. I think this notion of how have you moved folks in terms of savings, and to me, that'd be one that feels highly correlated with a lot of other indicators. That I'd love to see, as part of it, and one of the things that, we do have to think through on the granting side. Our outcomes are not, how much money did you make? It is really how have you moved, or how are you moving, positive outcomes in people's lives, and that's one that, resonates with me.
I think I agree with your view that it will be very hard to happen at the corporate level right now. But I do believe that there is a way that voluntarily we can measure those, especially when they're embedded in our strategy, right? So in my case, Simplified Solutions, we measure the average household income of every customer that comes through our solutions, and we measure pretty much how the penetration of our distribution is going towards where we want it to go, right? So we have our core business that is, as I said, the high net worth, but when we're putting our business out, we're making sure that the solutions are reaching those households. And I think, to your point, these are voluntary things, but they're tied to our strategy, right? There is investment around Simplified Solutions in the company, so how do we make sure that what we're putting out there is reaching the customer segment that we need? So probably more on the voluntary side as well.
We are coming near the end of our time. As we all go back to our jobs, and you think of this audience today, what is one bold, probably difficult, maybe uncomfortable commitment that you would ask these attendees to make that lead to outcomes that we seek? Clarence?
Me first, huh? I don't know what the bold one is. I don't know. I mean, I think, we've touched on a lot of things here. I do think this is the right group, where folks are here and are interested in those. So I think, for us, it's kind of a constant search, and honestly, the investments that I've been most proud of, and I've been at the foundation a short time, are those that, for us, my role is tech investment, but it's really those that help us get better insights into what is the real journey and lived experience and day-to-day experience of folks that we're trying to support. And I know, I'm going to say it, and I know a lot of folks in this room are already doing it, But I think, just kind of a doubling down in this moment, particularly as we have new tools, new services, people are experimenting with things. Just remember, those voices of change that we talked about, and don't be afraid to invest in not just the data collection, but the stories and understanding, kind of from a qualitative perspective too, where you can do that.
Thank you, Chris.
I think for me is resilience. And I think it's probably what I take with me too is it is hard, and especially being in a corporation, in the industry that I'm in and seeing the work that you guys are doing is resilience. It's just to keep doing the work. It's to keep walking the next step and the next step. And that's what I take personally too.
Randy?
We can't assume that the level of understanding that we think is there. When I walked in the door, Evelyn Stark and I had a very quick conversation. We hadn't seen each other in a while. We've worked together, different institutions, many years. We actually are like, isn't it crazy that this work is being framed as financial education? So I think one big, bold idea is to make sure that we're not going backwards, that we have to tell the story about what we are about. We have to invest in the narrative and raising up those stories. And I also just want to say, I know people are tired. It's been uncertainty is really hard to absorb. And I just would ask everybody to just remember why we do this work and to keep finding those moments of the joy, and just remember that, collectively we are making a difference. We are here. We're not canceled. And there's all this moment at the same time of uncertainty, but also all of this innovation. And I think if we can harness the moment, we may find that we actually propel ourselves much further towards our goals in a quicker way.
Unmanageable debt, homes lost to floods, bias in AI tools, daily financial stress. These are some of the many challenges that we've been hearing about over the last 2.5 days. But as we've heard on this panel and from our other speakers, providers, employers, nonprofits, and regulators are making progress. We had senior executives, CEOs, and C-suite leaders, not from one, from two, but many companies at this event talk about why this work is so important. And the standards we launched this week and more that we are going to be launching over the next several months, they provide you all with a practical guide for how you can make even more progress. This work is urgent. Our customers, colleagues, and communities are counting on us. Small changes in your actions, when done intentionally, with the broader goal in mind, can make a large impact. Small changes that build on each other over time can be transformational. I always find this community, you all, it re-energizes and reinvigorates me as I go back to my work. I hope you all feel the same. And please join me in thanking Brandy, Chris, and Clarence for their insights.